And let's go to XLC next. Actually, this is one of our top ranked sectors. Matt had a great week last week. We upgraded this one to the 15-yard marker after a breakout. Greg, obviously very, very bullish. Matt, any thoughts on XLC?
XLC, this is one of the areas of the market that I discussed quite a bit last week. After the Netflix move we saw a couple weeks ago, really kind of front run some of the other strong earnings reports in this sector. But for the most part, this is an area of the market that had a really good earnings season. Number one, that's why you're seeing the market play catch up when it was hesitating against the market, when it was consolidated between 65 and 67 and a half. Once that Netflix earnings report happened, and this is the importance of earnings season in general, you start to see themes develop specific to certain sectors out there. You started seeing a lot of strong trend and patterns start to set up here. And you are seeing now an area of the market that is a little bit overextended from its current price action. We do expect a little bit of a catch up in some of the underperforming areas of the market last week. Obviously, the small caps are still very, very strong here. But in terms of communication, specifically, we had it at that 35-yard ranking a couple weeks ago. That was before the Netflix report. We upped that to the 20-yard marker last week, and then we gave it another 5-point upgrade here this week. It's one of the strongest areas of the market. You never want to use the word safe when it comes to communications or technology. That's not these areas of the market, but it's one of those areas of the market that is starting to pick up momentum. It's on the backs of a very good earnings season. You are a little bit overextended right now. Maybe you look for some consolidation here early on this week in both technology and communications. But right now, as of right now, with trend and pattern intact and on the backs of some pretty decent earnings reports, communications, one of the best performing sectors out there, and one of our highest ranked sectors out there as well.
And the other one we had really, really at the high end of the rankings, I think a lot of the commentary you just mentioned is going to apply directly to technology as well. Take a look at XLK there,
Yeah.
Greg. Backs a lot of strong earnings, Matt. We also broke out last week. It's been consistent. We're continuing to trend here. Anything you want to add to XLK?
Well, 2.5 weeks ago, Tim, we identified in our scatter report meeting, and thus in our tackle trading newsletter, that communications and technology were starting to trend very similar to one another. And at that time, we had technology ranked at the 15-yard marker. We had communications ranked at the 35-yard marker. And that was before Netflix. That was when it was consolidating just between that 65 and 67. But with the catch up that you're seeing in communication, what it has caught up to is the trend and the pattern and the performance of technology. And so you got that 5-point upgrade with the communications to kind of put those right in line with one another. Again, we are getting towards not even the back half, the last third of earnings season, and technology's had a pretty decent earnings season. And when you're looking at some of these major players out there, you're seeing a lot of the individual components of technology very similar to communications, a little bit overextended. They all just broke out. But the problem is, and it's a good problem, but the problem is for right now, anyways, they've ran pretty aggressively in the last 5 trading days. And so because these two areas of the market are really kind of trending very similar to one another, they've ran with one another. They got a little bit overextended because they're coming from so far, a little bit of a deeper pullback retracement coming into that, rising 20 and rising 50. It had to run a little bit further than it typically does coming into that breakout. So you do have them a little bit overextended, not a lot, but you do have them a little bit overextended, very similar to communications. Maybe you see some consolidation to the first part of the week. Maybe you see a little bit of defensive pressure here. And unlike what the Chiefs tried to play last night in terms of defense, maybe 135 plays a little bit better defense than the Chiefs did. But you want to see that so that you can get a little bit of that flag pattern coming into 135. Maybe you see some consolidation between 135 and 136 and a half, 136. That's what you're looking for. I don't think it's wise to just go chase. Always be prepared and be ready for those secondary setups. And it just to remind people what I mean by that secondary setup, the breakout happened 2 days ago. That's when it happened. Now you're 3 days into the breakout, and you're a little bit elevated, you're a little bit overextended, especially in some of those components. But take a look very quickly at Microsoft. I said this immediately following their earnings report, is that you probably can't trade it given the fact that it's overextended and it was front ran coming into earnings. But you got to love the fact that it played defense above the breakout channel. And then just recently, it was one of my favorite picks coming into the week on our scouting reports. And every week, Tim, in the Facebook group, I always put in our, whatever coaches were in the scouting report meeting, always put their favorite technical trade. And I chose Microsoft because it's one of those scenarios where you missed the first setup, and the first setup was earnings, and you missed it for a variety of different reasons. And a lot of that you missed it was because you chose to miss it. You were waiting for that secondary analysis. Now you have that secondary analysis. You've had 3-4 days of consolidation between 240 and 244. You're forming a fairly decent trigger above that high base. And so the only reason I bring up Microsoft was a little bit just to remind people of Microsoft is still out there, and it's still setting up, and it's still Microsoft, but also to talk about it coming back to technology and communications here very quickly. So let's go back to the technology chart. You've ran a little bit aggressively in the short term. Just be a little bit patient as these sectors consolidate a little bit, especially the ones that did really, really, really well last week. Remember, last week we had a few sectors that were up 6, 7, 8% last week. And so let's just be a little patient as this consolidation plays out in technology and communication. Both of them are our highest ranked sectors right there at the 15-yard marker. Right underneath that, ranked, got a 5-point upgrade, is the discretionary space. And you know what, Tim? We've said many, many times you don't bet against the American consumer, and you still do not want to bet against the American consumer. Go to XLY, please, if you don't mind.
Looking for it. Sorry.
Yeah, it's right down there, 172.65. XLY is ranked right there at the 20-yard marker, and once again, 5-point upgrade, very similar to what we signed in technology and communications. They're running very, very similar with one another, a little bit more overextended and a little bit. And the key difference here, and the reason why it's ranked behind communications and technology, is it was a little bit weaker in that dip. It came all the way down to the 50-day moving average. It had a little bit more volatility. It had a little bit more selling behavior to it. And because of that, the pullback was a little bit deeper. And so the run up and the recovery is a little bit more overextended. And so the breakout's very similar, but I just have it a little bit more elevated, a little bit more overextended. And so I think it's a little bit more be patient here, wait for that next pattern to develop. Don't be chasing the dragon of discretionary right now. And so wait for that secondary pattern to develop. That could be that bullish retracement bull flag pattern. It also could be a high base. We don't know yet. All we know is we broke out and we had ran into the breakout. Definitely one of the stronger areas of the market. There's no doubt about that. You should have confidence in the American consumer because, Tim, you bet on the American consumer until the American consumer fails us, correct?
And the American consumer has not failed us in a very long time.
The American consumer has not failed us for a long time.
They will open their pocketbooks.
At least 12 years.
Like Tom Brady. They deliver.
Listen, I don't know. I honestly don't know who you would bet on more, Tom Brady or the American consumer at this point. I really don't. It's really close. I would probably choose Tom Brady, but that's just me. But you get the point here, and discretionary is very, very strong. Just again, little overextend. Let's take a quick look at the Twins Energy and Basic Materials very quickly. Let's start with energy. Very quickly. Energy got that 5-point upgrade, threatening another breakout here, and oil's been very, very strong. We know that oil being $60 for the first time in the previous year, literally earlier today. So oil's been very strong. Energy's picking up, threatening another breakout as well. A little bit overextended into the breakout. You guys, I'm like a broken record here, but there's a reason for it, guys. And I know that Russell's doing great in the market. And honestly, the market's up today. You guys, everybody should be happy coming through a weekend after a very, very, very good week last week in the market. But when you have those great weeks in the market, you can't expect another 8% in communications this week.
Mhm.
Now, if it gets it, fantastic, awesome, but you can't expect it. You can't expect the market to do again the same thing it did last week, when last week was really kind of one of those historical weeks. I don't expect that to happen. I do expect some consolidation. I do expect some type of slowing momentum. And when you're just sitting there, and we just took a look at, discretionary communications and technology, all overextended coming into the breakouts, all underperforming the broad market here today.
Mhm.
And so you got a little bit of just that right now. Energy's having a great day. You're threatening the breakout right now, fantastic. But now it's got to navigate that resistance channel. Now it's got to navigate that. Give it some time. It's okay. These trades are all working out right now. I'm not
Mhm.
saying just get out of all those trades from last week. No, we're in trade management techniques
Exactly.
right now, right?
Exactly.
It's just about new entries right now might be a little foolhardy given the fact that you're on the back of a very, very, very good week last week. So just let it simmer down and navigate that resistance channel on energy. Basic materials very quickly, XLB. No upgrade for XLB here to this week. It fought and survived the $70 handle. It was in that cluster of moving averages, fighting to get back above that. But none of us coaches liked upgrading when there's a true battle happening in gold right now, and there's a true battle happening in palladium right now, and silver's setting up, and silver's looking ready to rock. But when you looked at it, sometimes when you just look at the sector and you're like, oh, support held, it went up and it got above the moving averages, man, that should be that token 5-point upgrade. But then go look at the individual components. Go look at the industries within this sector. Go look at the individual stocks and find a good trade in this area of the market right now. It's a very difficult area of the market right now, so it's kind of one of those. Let's give it some time to kind of filter out some of the noise here, and to help us do that, Pete Thomas, the great Pete Thomas from Zahner's Precious Metals, he will be on the podcast later today.
Oh, exciting.
To talk about all things precious metals, what's happening specifically in silver right now, to give us his fundamental take on gold and all of his analysis on gold. So I know
Yeah,
many of you guys are fans of Pete and fans of Zahner Precious Metal. Definitely check out the podcast later today, because I'm
yeah,
looking forward.
I'm excited about that, Matt, because honestly, one, because Pete is just enjoyable to listen to. Like, you can just sit back. But I make a lot of decisions in my own investing based on Pete's insight, because the guy has a stellar track record, right?
He's got 40 years in the commodity market, and he's had
Mhm.
too many. And quite frankly, guys, we've known Pete now for about 6 years, and he's one of those friends of the podcast. Pete's been on the podcast probably more than any other person
Mhm.
besides, the three of us. But Pete's had way too many good calls on the podcast, guys. He's
Mhm.
had too many home runs not to listen to on that podcast. And so we bring on Pete once a quarter to give us all his take on all things precious metals. And I wanted to, given the fact that there's a lot of national conversation specifically happening in the silver market, I just wanted to bring on Pete to have a conversation to get his take on things. So I am excited for that, and so definitely check out that. And I'll have some of the things to give our viewers here in the halftime report tomorrow. An update on that conversation as well. We'll take a look at it from a technical perspective tomorrow, everything that Pete and I talk about on the podcast today. But definitely check that out later on today. And we're trying to get Pete on the halftime report, but we got to work out some compliance concerns. We'll
Yep.
just put it like that.
Yep.
Because I do really, really, really well with compliance conversations. Those are things I do really well with.
Those are your favorite.
Oh,
Well,
by far my favorite conversations is whenever I'm called into a compliance conversations and I put the legal hat on. So they
not
enjoy it more than I do.
non-metal related note, I will say
Yeah.
this: 3 years ago, almost to the month, Pete was on the podcast when Bitcoin first got its futures contracts issued on the CME, and Pete had some very strong things to say about that. A different scenario now, but now
Oh
Ethereum
yeah.
is now having futures listed on the CME. So I want to hear what Pete has to think about the crypto markets as well. I'm sure he has a
Well,
take.
and now Tesla's converted every dollar in the history of mankind to Bitcoin. I mean, Aren't we all just, using Bitcoin now? I mean,
Yeah.
is there a thing called Ethereum?
We'll
I
take a
thought
look
it
at
was I thought it was Dogecoin and Bitcoin, and that's it. That's all
one
we
A,
need.
one B,
Yeah,
Dogecoin.
that's all.
Yeah.
Like 50% in Bitcoin, 50% in Doji, and then we're good.
Yeah.
Then we're
Nope.
good.
That's
No,
not,
no,
that's
we'll
not
get
it.
Pete. We'll definitely get Pete's take on that. Outside of those sectors, a lot of 5-point upgrades. Nothing really to see. In some of the more what you would traditionally call defensive sectors, safety sectors, utilities, real estate and consumer staples here. When you're taking a look at these three sectors, consumer staples did get a 5-point upgrade. It was a token 5-point upgrade. None of us like what's happening in staples, and I got this as a bearish retracement that has no momentum to it at all from the bull side. But when you look at it from a longer term perspective, you're in the middle of wide ranges, both from a trend, from an intermediate to a short term trend perspective. You have a little bit of conflicting behavior in short term versus intermediate trend analysis. And so, because of the conflict from trends and patterns, and quite frankly, just the utterly boring nature of this area of the market, this specific space of the market, it got our token 50 sitting on the fence 50 handle there. Real estate and utilities, real estate actually got upgraded into the bullish area. It is fighting a breakout here. We love what's happening in the short term. Now it's fighting that breakout. We're front running that breakout a little bit of 38 here. We did up to the slightly bullish, even though the intermediate trend is neutral. You got to like the momentum you're seeing in real estate over the course of the last couple of weeks, fighting against that 38 resistance handle. That got that 5-point upgrade. And then utilities, another very, very boring area of the market, but, neutral trend, neutral pattern, fighting for a potential breakout of 64. That got a token 5-point upgrade into the 40 handle. And that's typically there when we're fighting at a resistance handle. So outside of that, we talked about some of the major sectors with some of the major news out there. Wanted to take a look at some of the defensive areas of the market. Outside of that, though, my work is done here on Sector Analysis Monday.